Being an ant head and cryptocurrency altcoin trader and investor is about doing the research in the cryptocurrency and blockchain space. Here are your hosts, Mr. Crypto and Dr.G.
Hello, everybody, and thank you for tuning in to our blockchain cryptocurrency podcast. My name is Raphael, aka Mr. Crypto, and I'm here with Matt, aka Dr.G from enthead.com. Now, Matt is going to give you the announcements and what we have for the show today.
Yeah, what's up, ant heads? What's up, cryptocurrency altcoin traders out there? Welcome again to episode number 2. Can you believe it? We're already on episode number 2. No, really, if you see the numbering on the podcast, it's starting at 1001, 1002. We chose to start it at 1000 to separate it from some of our older episodes. But we are on episode 2 now, and we got a really good one for you. So here's what we're going over today. Mr. Crypto, he's kind of more the financial whiz. I'm more of the hobbyist, if you will. So he's going to show how he does moving averages, how he tracks cryptocurrency through some solid financial analysis, as well as using those tools that we mentioned. We're going to then turn it over to me to go over some of the technology. Today, I thought I would introduce you to the concept of decentralized applications. I'm not going to explain too much about the background of it other than just show you some examples of decentralized applications. Later episodes, I'm going to get a bit deeper on blockchain, etc. And then we're going to kick off, which is perfect timing. We're at the beginning of March, our portfolio of the month, where we show you 5 to 6 cryptocurrencies that we follow and we wanted to present to you. Of course, we are not financial advisors. These are just our opinions of specific cryptos that we follow and we think make up a very good, solid, diversified portfolio. So we'll go over that, and that'll be the show. So certainly hit us up on our specific websites. For me, you can hit me up, Matthew at enthead.com, and of course on steemit.com/entheads. Mr. Crypto, what you got for us today?
I'm just pulling up screen here, Matt. Just give me a second. Let me know on your side.
Mr. Crypto's on Steemit as well, so you can hit him up there. He's doing pretty well there.
Yep. The username is at crypto altcoin, no S's. At crypto altcoin.
Crypto altcoin, no S's.
It's a great platform. You should definitely check it out.
It is good. He and I kind of discovered it together. He's a little bit ahead of me on that one. I need to learn a little bit more from him on that one too. But Steemit's a really good community. At some point, I know we're going to be featuring them here on one of our future podcasts. But in the meantime, today we've got a pretty full agenda for sure.
Definitely. Now, what you see on the screen here is my BTC USD chart. I know for the new guys, they're like, oh my God, this is so fine. What is this? So we're going to get into the Bitcoin a little later. I would rather just start with something fresh, a fresh new chart, and show you guys, give you a brief overview of how I look at them and how I analyze charts from basically from beginning to end. And today I chose to analyze a little bit of NEO, because NEO's a good platform. It's a great platform. It's one of the stronger ones. It's showing a lot of. It's actually the Ethereum's competition. So we're not going to look at Ethereum or Bitcoin. We're actually going to choose that NEO. Now this chart looks a lot cleaner. No lines, no anything, right? So when I start looking at price, my thing is I look at price action. And I know a lot of you guys some of you guys, the new guys, don't even know what type of chart this is. This is a candle chart that we're looking at. And we can't really get into too deep details, or I can't tell you too much because we don't have that type of time. So I'll probably make some courses later on to tell you how to really read the charts in detail. But for now, I'm gonna let you know how I look at them. And first of all, I analyze the monthly chart. I go from the longer time frames down to the shorter time frames, and I do this to better see the trend in the market, the long-term trend in the market. Right now, we're looking at NEO monthly chart, and one thing you got to understand about the cryptocurrency market is brand new, so there's not a lot of data in a lot of these pairs. We're seeing at about 1, 2, 3, 4, 5, 6, 7 months of data on NEO, which is kind of not good for a technical analysis type basis, because you want as much data as you could possibly have to actually analyze and have good predictions in the market. But we got to work with what we have, and this is what we have now, right? And it's telling me right now, so by looking at this chart, it's basically telling me that NEO had a crazy run up from November till last month, January. I mean, the month prior, 2 months ago, January. This crazy run up right here. But now we're starting to see a pullback. We saw a big pullback here on February, which the price reached all the way down to about $63. And it looks like it did get some buying pressure towards the end of January, because you see the wick, the long wick towards the upside. That means the buying pressure came in towards the end of January, and it closed out at $130. Now, this month candle is brand new. It's only 3 days in, so it really is not telling me too much. But I do see that there is some selling pressure still in NEO right now. So the way I analyze the monthly, basically to know what the longer term trend is, and I go into the weekly. I look at the volume as well. I can see that around here, these two are the highest months with the volumes. When you see this big move right here, the volume has actually been declining since then, and it's not only in NEO. It's actually been declining BTC and a lot of other coins out there. But I do take notice of that, and I'll move into the weekly. Now the weekly gives me the same data as the monthly, but it just spreads it out in more candles, so I get a better view of the data basically. So just off the top, I'm seeing a nice little wedge being formed here on the weekly with NEO, and I see some good levels of support right around $93. I'm telling you this because if you can see these two candles that came down, these two big red candles, they literally both stopped right at $93. So that means they both have support around that area. That's just off the top. I'm seeing it off the top. And so if I was to mark it down, so all these lines that you see on the chart, they all mean something, right? They all mean something, but they can mean something different to me. They can mean something to you. So, you know, and they just because I have a support and resistance line on my chart doesn't mean that another trader might agree with it and not agree with it. But when I do my trend lines, I do go by a couple of rules, and the main one is that I want some price respect at least 2 or 3 points of the line. Now here, this is weekly, and we don't have enough data to really get those 3 points. But if I was to look at this right now, my support, my trend line would be, it's in a downtrend, as you can see right here. And the price respect would be the high. And this week, they both respected that line. So that's what I'm going off, just off the top. Now, this is not perfect analysis. I got to do this kind of quick because we are doing a podcast, and we don't want to run too long in time. But and then we do have an area of support that I mentioned earlier, so I would align that right here. Now, for most traders, you can already see the formation is making. It's making a little bit of a wedge right there, right? With the support. The support around 94 and the resistance coming from this trend line. Now, just off looking at this, I don't have any moving averages on one of my main tools is the moving averages, and there's not enough data here to get my 3 favorites, which are the 50, the 100, and the 200. So I already know that NEO just came from basically a skyscraper bull run, and it's now pulling back. I'm just trying to figure out if it was a healthy pullback, which looks like it was a healthy pullback. And another tool that I use to figure that out is the Fibonacci retracement. Now, this is a tool that's widely used in the industry. I used it for used in traditional markets, and it's a good tool to use in the crypto space as well. So the way this is basically Fibonacci. If you don't know what Fibonacci retracements are, that's something that you should definitely look at. That's basically a set of numbers, a sequence that is found in nature, everywhere in nature, but it's also found in trading patterns. So a lot of traders use this. Go look it up. It's definitely something good to learn. So basically, you go from the lowest of the low, and I want the Fibonacci retracement on the larger time frame. So you can do this like if you are in a lower time frame, you can get Fibonacci retracements on that. But I want the big trend. I want to know, what's really going on. So I go from the low to the high. High right here. And if you can see, I know the people that are listening to us on the podcast won't be able to see my screen. And if you want to see the show when you get home, you can go over to the website, cryptocurrencyaltcoins.com. The video will be up on, and you can see the charts. But the ones that are looking at us through DTube or YouTube, you can see the Fibonacci numbers here. And the key numbers are, this is, of course, the 0.618 is the main number that you want the retracement to. And if you can see the chart, from the high, it already came down and tested that 68, that's 0.618 retracement. Showed respect to it and it's bouncing back. So that's a good sign to me that it was a healthy retracement, and we might see some upside, especially when, like, it's not all about technical analysis. I know that NEO's a good project. I know the fundamentals about NEO, and NEO has been doing really good lately. So you got to mix the technical with the fundamental as well. So I hope you understand that. So after I kind of get a good idea of what's going on in the longer time frames, I dig into the shorter time frames to execute, to see my entry point, basically.
Let me ask you a quick question, Mr. Crypto, for some of the newbies out there. When you did the Fibonacci retracement, why stop all the way to the upper right corner rather than stop it up there at the top of the wick, where the very top?
Well, it is at the top. The Fibonacci retracement is really just telling you that this is the top. You don't look at at the angle line. You look at up from down to bottom, because Fibonacci retracement basically is telling you that it reached 100% and it's retracing 23%, 38%, 50%, 61.8%.
So you don't have to go wick to wick when you drew it. You could go wick all the way.
It depends on the tool you're using. I'm using TradingView right now, and the tool that TradingView, you don't necessarily. I mean, you could. Is this what you mean right here? Exactly. It's basically the same thing. I'm just looking, because really what you wanna do is go from here to the highest, right?
Gotcha.
If I spread it out,
pretty much the same.
The fact that I'm going over here is just telling me, like, I don't know how to explain it. I'm sorry if I'm mumbling a little bit, but
it's pretty much the same.
I am doing what? Huh?
Yeah, you're right. It's pretty much the same. Whether you, instead of going wick to wick, you just dragged it all the way up to the right corner, and it's still the numbers stay the same.
I'm still measuring
the top.
The same difference in price.
That's right.
The price difference is really what I'm measuring. It went from $12 all the way up to, well, I tried to get the lowest point, but that's the lowest data I got. It went from $12 all the way up to about $199.
Yeah, almost 200.
The fact that the line ends right here is just a visual for me to see, like, when it retraces. You know what I mean?
Mm-hmm.
I hope you understand that right. But,
got it. Perfect.
Okay.
I asked that because I've seen some videos that tell you to go wick to wick rather than wick to all the way to the end of the screen.
Yeah, it actually all depends on the tools too. A lot of the tools let you go, like, I know what you mean. They go wick to wick, but this tool lets you see both the past and the future. And I think there's a way that you can change that in settings, but I actually like the fact that I can go and see the colors, the difference in colors within the ranges and everything towards the future of it. So I always pull my indicator to the future.
Cool.
If you can, I hope you understand. So then move on. We dig into smaller time frames when it's time to execute, and from the weekly, I go down to the daily. First, I want to confirm that my levels that I set earlier were correct, and it looks like they were pretty good. We got some respect right here, some respect right here, some respect right here. This dipped down really low, but it came right back. So, you know, that was probably a fake out to the downside. But it looks like the support line is a good line for me for now. Yep. And the trend line going down, the trend line has respect, of course, at the top. And as you can see, these two daily candles also respect that line now. And one thing that you can see that on the chart now is this line, this little blue line that came up. This blue line came up because it gives me now, since we narrowed down to the 1 day, it has enough days to give me data for the 50-day moving average. Now, this is something that I want to touch upon because I know Matthew wanted me to speak up on this on the moving averages. So, moving averages are basically indicators, market indicators that take the previous data and average it out. In this chart, basically, I can indicate this line to give me the average price of the past 50 days, and that's what it's doing. So right now, it's basically telling me that the average price of the past 50 days is at $126.
Mm-hmm.
So one thing that I do want to mention is that all indicators are lagging. They all derive from price. So none of them can tell you what price is going before price actually does it. So indicators are lagging. They're indication of previous data. It's always good to use it as a tool, but don't solely depend on any one indicator. And use a whole bunch of tools together and feel confident about your move, basically. But definitely, EMA is something that I use, and the moving average. So it takes the previous set of data, and you can get the average price for that. There's two different types of moving averages. Two of the main ones: exponential moving average and simple moving average. The simple moving average does that. Basically, it's a simple moving. It's a moving average. It takes the previous days, whatever you want it to, you can tell it to take whatever days you want. Now, if I was to move from days to hours, let's say, now I got enough data for my other favorite moving averages, and we'll get there later. But you don't have to, like, whatever time period you have on the chart, that's the moving average time period that's being used for the moving average, basically. So right now, my 50 EMA is telling me that the average price for the last 54-hour time frames is at 126. You know, which is accurate. So I just wanted to let you know that. And let's move back to the daily because I'm not really done here saying what the moving averages is. So that's what the simple moving average does. Now the exponential moving average, which is the moving average that I like to use, puts more weight on the more current price data. And I like to use my exponential moving average in cryptocurrency because we don't, like I mentioned before, we don't have a lot of price data in cryptocurrency. So it's good to put more weight on the more recent, and it's very volatile too. It can move in a second, it can move it at any time. So it's good to know what's going on more recent. So that's why I use the exponential instead of simple. Now, Matthew, do you understand where I'm coming from with that?
I do, man. Totally. Keep on going. Absolutely.
Okay. Just making sure. So this is where we're going with it. We're on a daily, and we see some respect on the lines that I got in. The volume, I noticed that the volume is really low. So, that's the volume basically gives me a confidence of strength in the move. So I'm not really. It's not really gonna be too much movement. I don't think right now, unless we get some volume in it. But as you can see, it went up and touched the upper trend line and it bounced right off. It closed below the 50 moving average, and that's not a good sign. The closest below the 50 moving average is most likely going to continue down to see lower levels unless it, something happens in the market to turn it around. But I doubt, because I don't see anything really stopping it from getting to the lower levels here. And maybe it'll bounce back up from the 93. I don't know if it will get that low. I would have to actually dig into this a little more, but as I've seen it right now, yeah, it could go. I would not put my money into NEO right now. It goes below, it bounced off. If you can see this, if I zoom in a little bit, it bounced off the 50, and I'm still seeing some selling pressure. So if you're bullish on NEO, I would not. This is probably not the time to be buying in. But if it comes back and tests the upper band of the wedge and breaks it and shows some confidence breaking it, maybe then. But I would let this play out. I would definitely give this some time. I think it could go lower and you can get better prices on this. But that's just my opinion. And if I was, now let's say I did see some confidence and I did see some movement, I wanted to buy, I would dig in even deeper and go into the 4 hour time frame. And this is where I have my all three moving averages. My favorite moving averages to use are the 50, the 100, and the 200 moving averages. And even here, it gives me more indication that this is not going to be a good buy right now. On the 4 hour, it closed, had a nice close under the 200 EMA. It was a nice candle. So I mean, I need to see maybe reach some support, maybe around the 50% retracement, or even down here, or even down at 93, and see if it turns around to the upside. But yeah, that's definitely something that I would lay low for now and keep an eye on. But that was just quick to tell you how I look at price, and I don't want to take up more time on NEO and digging on technical analysis. I just want to move on to Bitcoin. So you guys.
2 questions before you leave this real quick. Sure. 2 questions. So. One, before you leave this chart, where did you get the moving averages? Were they the same place where the Fibonacci tool was? Under the trading view?
That all depends on what platform you're using. Here you can just go indicators here, here and type in Fibonacci, or actually not even easier. Here on TradingView, you can just go to the side panel and go into the Fibonacci retracement. So it all depends on what platform you're using. Yeah. But most platforms nowadays carry the Fibonacci tool on them. I mean, I like TradingView. What TradingView does is basically take all your API keys from different exchanges and it has the data all in one platform. Now, currently, I'm not trading in traditional markets as heavy, or I'm really concentrating on crypto. So I'm using TradingView because they now have all the crypto APIs, or for most of them, for all the majors especially. And you can get the data here and have the comfort of having all the tools as well. There's a paid membership for TradingView.
That's great.
It's not a lot a month, but if you want to do some active trading, or I don't use the paid membership because I don't do my trading on TradingView. I actually execute my trades on the cryptocurrency exchanges, but I like to use it today. Definitely very.
So. In this case, pretty much, we really wouldn't be a buyer until it hits around the $93 mark, or the 50% mark, roughly, somewhere in there.
Yeah, I would have to see. Sorry, I would have to see some confirmation of some bull, a turnaround of the price. Because if it goes, let's say, I would not touch this right now. It needs to find some support and then show some strength to the upside.
Gotcha.
Now, if it goes, let's say if it bounces off the 50 or comes down here and bounces off the support line and comes to test the moving averages and clears the moving averages with some strength, or I see some certain patterns forming on the chart that tells me that something's going to happen, then yeah, maybe then yeah. But now I would not touch this right now. I still see some selling side. The volume is really low. It's under the 50, and I'm talking about the 4 hour right now. It's under the 4 hour, so I wouldn't touch it right now. I would wait.
Cool deal.
All right, so just to move on to the BTC USD before we go, because I know you guys all want to know about the king. And see, as you can see, they all have the API. So you got different exchanges. So the one that I use is Coinbase because they're one of the biggest exchanges in the market. So that's another thing that you got to think about. Different exchanges have different prices. They vary slightly. So my price might not be exactly the price that you're looking at, depending on what exchange you're looking at. Now this is my BTC USD analysis, and if you want to know how I got to this, you can follow me on Instagram or go over there and check out my my webpage, and you can see my daily updates and see how I got this far. So, looking at BTC USD, I see the head and shoulders pattern that just is forming, or it's formed, and I'm waiting for the neckline to be broken. I know you guys don't understand these technical word terms, but you will, and you will once you get more comfortable with this technical analysis. So basically, head and shoulders is a certain pattern. This is a reverse head and shoulders, actually. So it's an upside down head and shoulders. You can see the shoulders here and the head up top, well, down bottom. And the way this is building up, to me, it's a bullish. It's a bullish indicator. It's not, especially if it breaks the neckline. The neckline right now is around 11,500. So if the price was to go above here, it all built up to this because there's a lot of other things that happened. I was writing the price since it was at the top at 20,000. So I was writing this whole thing down, and it got to the 6,000 mark, and I was actually lucky enough to consolidate when it was at 6,800. So I didn't get in, but I was able to consolidate my portfolio and get a bigger position in Bitcoin when it was at 6,800, which it's a good thing. So I started writing the price down here, and I started to notice that it was building. It was a momentous shift, not literally down here, but it started building higher highs and higher lows. You see these lines right here. It started building higher highs and higher lows. So what I mean by this, basically the price is forming high highs and high lows. So this low is higher than this low, and this high is higher than this high. This low is higher than this low, and now we're on the way to building a new higher high. And if we do that, that would be right around the area where that neckline would be broken. So I was already looking at this head and shoulders pattern when it was way down here, and now it gave me more confidence that it's actually turning to the upside, that maybe this bearish run is over, and we could break this neckline and see some higher numbers, some higher prices. So right now, Bitcoin is at 11,359. I think that we can go. We need to see it break 11.5 just to really be bullish on it. I like the fact that it broke the trend line going down, and I like the fact that it's on the verge of breaking the neckline on the head and shoulders. And I'll definitely keep keeping an eye on Bitcoin. It could come down and find some support around the 11K mark, or after that, the next support area would probably be the 10.5K mark. If it goes lower than that, you can see it even go back down to 9,000.
No doubt.
At my opinion, worst case scenario right now, because I do see the market sentiment going to the upside, and I would just give it a couple more days and see if it breaks. Maybe I think if the volume turns to the upside, I think you break it in a day or two. So yeah, that's Bitcoin and Neo, and how I look at charts. I hope that wasn't too long for you guys. You know, you just need to get into the market and try to learn these little terms, and because really after you get it, it's not that hard. You get that aha moment where you start to build your own strategies and in your portfolio.
He's right, you know. I'm a hobbyist here. you know, I've just learned to use some of these tools. I just got on TradingView myself about 2-3 weeks ago. Learned the Fibonacci tool about 2 weeks ago. Trend lines, whatnot. Of course, I've heard some of these things, but until you actually do it, you know, you're just kind of on the sidelines. And that's all it is. It's just kind of, you know, as those of you who are watching the video on YouTube, or the websites, watch this over and over again. Open up TradingView, pull up your favorite coin or currency, and do it. And if you didn't get it, just hit reverse and do it again until you get it. I had to do it several times, but it's coming a bit more natural. I've heard the term head and shoulders as well. Don't know how to do it yet, but I will soon, probably like the rest of you out there who are watching this video and or listening. So there's plenty of time to learn. So you know, definitely appreciate that, Mr. Crypto. That was really good. It's something I know I myself need to learn more about, and it's interesting to see where Bitcoin is as well at this point in time.
Yeah, and I'm sorry I couldn't be more concise and more clear on certain things, but it's so much to teach when it comes to this thing. It's a lot of psychological. It's a lot that goes into this. So the best thing you could do is learn these terms and go out and do your own research. Study the best of them. And there's so many ways that you can use these tools. I use EMAs a certain way. Another person might use them a different way. And there's so many combinations that you can make with these things. So do your own diligence. Go out there and start to get comfortable with technical analysis, because it might not be a big thing now within cryptocurrency, but going forward, once that data is there, once the market is built, this is gonna make or break you as a successful trader. That's what I think.
Yep, he's right. He's right for sure. All right, so we shift from the technical financial analysis to the technology behind these coins. So I'm going to go over the concept of what's known as decentralized applications and do it as quickly as I can so that I don't bore you. Those of you who are watching, you can see these examples I'm pulling up. Those of you who are listening, I'll share the websites. So what is decentralized applications? Well, first let's understand centralized applications. We moved in the 80s to something called a client-server model, where rather than downloading, let's just say, Microsoft Word to your desktop and everyone else doing that, why not take that piece of software, such as Microsoft Word, and put it on a central place like a server so that all of us can access the application. It's in one place. We free up space on our computer, and so that we don't have to download that heavy software. That's a client-server model. In a dApp or decentralized application model, we kind of go back to the model of almost where we don't have a central server anymore. And why do we do that? Well, first of all, if that central server that has Microsoft Word, for example, breaks down, shuts down, what have you, we're hosed. We no longer can get to the application we need. So that's where blockchain comes in the concept of decentralized applications. So a way to better explain it is a website, for example, an application won't just be on one computer. It'll be on all of the computers, if you will, on the blockchain. So if one goes out, not a problem. Another block or another computer that has a copy of it, you can get to it. If that one goes out, not a problem. It's pointing to yet another block or another computer so that you can get to that application. And essentially, that's what decentralized application means. Decentralized meaning there's no one central point or place where the application is or lives. And that's where blockchain technology comes in. But I wanted to share 3 websites that were built on the concept of decentralized applications. So you're going to be looking at 3 of them right here. You know, there's plenty of them out there. I just picked 3 that, you know, I've been looking at. And so for the first one is KYC-Chain. What is KYC-Chain? Well, it is a decentralized application. What does it do? The concept here is that it's going to help you and others identify who you are. You know, this day and age, we do identity through IDs, passwords, all kinds of different ways to identify who we are. However, there's a much better way to do it in this decentralized application concept, and that's where KYC-chain comes in. So I'm not so important about what they do, but I just wanted to provide an example that yet here we go with decentralized applications. We're building all types of functionality on this new concept of blockchain. So KYC-chain, have a look at them, and you can kind of learn a little bit more about what they do. But they really all are about protecting your identity and finding out the truth that you are who you say you are, etc. Whenever you do things like job applications or even application for rental space, housing, I can see all kinds of use to go to one central place, if you will, or an application that is decentralized. And that's what KYC Chain does. So again, that's KYC-chain.com for those of you listening on the podcast.